Friday afternoon, another wild week, huh, everybody? So I am going to hit on just kind of what I think going into next week, and I got a lot of you asking me about different markets, and then just want to recap some of the stuff that's worked well. And I really tried to push people that wanted to work with us on the prop program or the options team in at the beginning of this month. And like I know Valentine's Day is coming up, and so for some of you who had tax stuff and you're kind of been waiting for the spring, but this is what I was talking about when we were so late cycle with the divergence between bonds and equities and coming into that 3,400 strike on S&Ps, and then you just had everything so late cycle, so overbought. NASDAQ close to 10,000. I mean, we talked about that stuff in January and potentially setting up for a big move. And it's not about, it's never one thing. So this is a lot to do with the virus, but it also, huge parts of the economy were slowing before. I mean, Wall Street's narrative was a bean deal for all of last year. And then they moved the field goal posts so many times on why growth is slowing. But that's not the key point, is to figure out, okay, is growth slowing, yes or no? Now we're just having an accelerating, there's no question about it. You can't shut down the world's growth engine and not expect the data is going to be horrible. The data is coming out. The data is being reported, guys, still. That's pre-virus, that is just slowing on, just continues to slow as far as growth goes. So lots of pockets around the world. We still have the euro crisis, the banking crisis. We still have all the repo stuff. But obviously the virus is front and center. So from here, to me, the risks are that how long is this going to take? I think this is the key thing. This isn't a type of risk that goes away with a tweet. You know, the administration could change their stance on negotiations with the trade deal, and that could have happened in a weekend and change the whole risk environment come Sunday night, Monday. This is a complete opposite. The only way that this uncertainty gets removed is time has to play out. So we know the numbers are delayed, the counting's delayed. The virus is here in the US. They're just not counting it yet. At some point, they're going to be forced to count, and then I think you're going to have another oh shit moment even further from there. I think that's the risk. The only thing we talked about this morning on the prop team was that the headlines that probably could get this market to bounce meaningful is one. I mean, the market's already pricing in a cut. That's 100% if you look at the Fed funds rates or the options probability into March. And so we've been long. This has been one of our best trades. It's absolutely exploded this afternoon. And we want to keep trading this for not the cut coming, but another cut from there. So there's several cuts that we're playing, and you just cannot have this much damage and everything put on hold like this and all the supply chains, blah, blah, blah. There's no way this isn't going to ripple completely through markets, economies. It's just, there's the only way the Fed's going to be able to help boost in their minds or counteract all this shit is they're going to have to cut. So you want to stay long treasuries, but especially in the front end, just keep adding to it. Like if you're having gains this week, I put a lot of those gains back into more of this trade. Anyway, that's the backdrop. And so if we think that we're talking about into March and April before I think you have any clarity on whether or not it's back to usual, this uncertainty, this fear, et cetera, goes away. So that means the VIX stays high. And then what we want to do, guys, is to manage and trade around these positions and these trades we like is, hold on one second. is we just want to key off a key big picture points. So why don't I just start with the Dow, since everybody's fixated on stocks. On the monthly level, there's still we've had the call that we're very late cycle. If you want to talk about coming off the business cycle, off the 2009 lows, lots of reasons that we could be entering a multi-month, multi-year bear market, and that's still the case. But to really make that call, it's going to be all about these 2008 lows. That was the last higher low that we made in equities, right? We punctured a lot of the intermediate term stuff first, which is, again, us following our model, set us up contrarian short the Russell first. And if you guys remember, coming into these major highs into this month, we were still net long the Dow. I was still long the NASDAQ small. We were day trading from a long bias a lot of times. But as we started to roll this intermediate term picture, it's always the same. You break the TMS and the trend on the 30-minute, then it's the hourly and the 4-hour. By the time you start breaking hourly and 4 hours, and then like the 8 on the daily, it's time to start switching to more short. So while we were playing contrarian short the Russell, when the market's still making higher lows, by the time we cracked here, we were already adding to shorts. So that's just much better timing. That's how you trade a turn. And then you have most of positioning and people, the bulls, they're not getting long. They're not getting out of stuff until these big pukes this week. But anyway, I want to talk big picture. So break the 8 first. That's what I was talking about. This whole area in here. I draw it a little bit differently. That breaks. Then we highlighted this was major. That breaks. You get the move to the 200, which we got. You get the move to pi, which we sliced through. So from here, we seem to be checking up at the August lows on the Dow. And let me just finish with the Dow here. If these, we already went through what you could maybe call reversals in our model. So we went through here, went through this support. This one is just more of a support level. This was the key pivot. And then these are all just become support levels. But once you break here, you don't continue to fight it because you're looking back in time at these support levels. It's short cover into these lows. So at this point, when we break the bands on this time frame, the weekly, it's this level, and this level that matter. Those are the downside. You know, we don't really use targets, but if you want to talk about what levels matter, there's a little bit of support here, but the Dow looks like the 22,000 area is probably where this market needs to go. If you think about it from a perspective of what has global growth done since the Fed panicked and pivoted here in the end of 2018, the economy's gone nowhere. We had a little reflationary trade bounce in asset prices and inflation, but nothing's changed in growth. Now it's going to be worse. We're going to be worse off now with everything going on. So to me, there's no reason why the market shouldn't discount back to these levels. I think it's 22,000, 2,100. That doesn't mean we can't bounce on some vaccine headline, or maybe the market does take a cut as somewhat of a relief, but then you have another leg down. So I think this is where we're ultimately headed on this this trade, this move. That's what the weekly chart's telling you, the Dow. And then from there, if you want to call it a long-term bear market like you had in 08, 09, I think we're still kind of, you want to make comparisons, is probably comparing more like 2007. Just double check something else. Lost my meeting controls. I hate it when it does that. Sorry. I don't know, forget what I was going to say. Oh, we want to talk about big bear market? No, it's not going to come into play until we break the bands on the monthly level, and then that's a whole different trade. As you break the bands here in 08, and then that was a crash. I don't know if that's going to be. I think it's going to be tough to break. Since we came from such a high level, it's going to be tough to break 2018 lows, but anything's possible. A lot going on with Bernie, elections. All right, so those are some of the pivots on the Dow. I'll just hit S&Ps very quickly. Shit, I already might have had the coronavirus this week. So getting better from some flu-like. I don't know. S&Ps, the big level other than everything else is similar to the Dow, but if you look at the October lows is what we're holding on to today, and then the NASDAQ, it's actually the 200 in addition to those lows from, I guess the NASDAQ is holding December lows because it advanced more rapidly. So I've been caring about this 200 level today. We tailed, but you're doing nothing, but still got to get it back above the prior high, or, coming into Sunday night, Monday, the prior high would be up there around 85.04. So here's how I'm playing it, and this is the same way we would kind of day trade, is you can set up and nibble long here, guys, or you got to make sure you're still net short. You can come in over the weekend and we get a grasp on what the real numbers on nationwide on all this virus stuff. I mean, it's so much risk that you're just going to open down harder and harder and harder. So that's what I mean by net short is, yeah, sure, maybe you're long one contract on the Dow, but I'm short the NASDAQ intraday or swing trade. I'm short the Russell. I'm long this monster of a chart here. I'm long more treasuries. I'm long gold. Gold is kind of the worst things get, guys. Gold is going to start acting like a liquidity pool, and guys are going to start selling gold just because they have to meet their margin requirements. If they're getting blasted in equities, that happens in all the big risk off moves. Gold rallies, and then there's days where somebody just has to sell and just smashes it. That could be central banks, it could be entire governments at this time. All right, so you guys know the stuff that we like, and then it's okay to nibble here. If we do bounce, have a week where we bounce, I mean, there's chances to add to that intraday. At the same time, there'll be chances to reshort the stuff that we like. Like, I'm small core short the Russell now, much heavier when we were up here. The Nikkei, same thing, much heavier, only light short. So as we bounce, we'll feed into that, and then there'll be opportunities to kind of maybe take some longs on the way up if that starts to materialize. So that's the way you play the portfolio. We bought a little bit of XLU on the lows. Yeah, that's down too. But I'm gonna stay net short, and then maybe even buy the Dow, or NASDAQ down here at pi, something like that. So you kind of have to, you can trade the counter trend moves, but we want to stay net short. All right, directionally, the dollar. Still bull market. We had a nice multi-week rally, so I'm not really surprised that we came off. But I don't know. It's just kind of a timing thing. If the Fed's going to ease, the dollar could come down a little bit more. But we want to step into being better buyers of that weakness. So we've been expressing that by selling the euro versus dollar. So I highlighted the 4 hour earlier in the week. We went up failed at it. This euro dollar move is telling you that the Fed's probably has an emergency cut this weekend, next week. And so on that news is probably where you'll have the euro stop going up and the dollar kind of hold in. But it was good to trade on the way down, and now you just got to slowly fade back into the core short. Against that, on the other side, we've been short dollar yen. That's just absolutely getting smoked. This is just an amazing reversal. I was surprised that it rallied and yen sold off in the face of all this to begin with, and now it's back to being a safe haven trade. I was just looking at what other dollar yen I could maybe cover on. This is just a monster move today, almost 2%. Currency is crazy. So still core short that, but definitely taking profits today. Now euro yen is on the other side of this dollar yen short, being long yen, and then the euro being short euro. So this is getting absolutely smoked today with the yen strength. Again, this is like I'm staying heavier short euros and long dollars than I am long this pair, but this is kind of a hedge that last time I nibbled down here, we had a little bit of a pop that coincided with the euro bounce and the yen move. Probably the yen's going to win out here. This is actually a very bearish chart. I mean, if you wanted to have a core position here, I would be short covering today. But anyway, I'm playing that as a little bit of a hedge long contrarian against my euro shorts. Treasuries, just more profit taking. You just keep buying dips, stay core long the front end for sure. And then when you get decent pullbacks, buy 10s, buy 30s. There's lots of opportunities here. Keep trading everything from the long side. I don't have a yield chart up, but I mean, if you look at prices, we're probably going back to these highs. And there's no reason why the long end's not going to go back up here. Even if we rally stocks, bonds go sideways for a week or two, then you're going to just probably have another run up. All right, so bullish bonds, that's a pretty easy one. Oil, I'll just hit on lastly. So here's the thing with oil is the market, I think oil market's priced in. What the market seems to be is waiting. We don't know how bad things are. Everybody's, it's just the flu. Oh, well, it's not in the US. Well, if it is as bad as it's been everywhere else, and it's going to be that way in the US, and it's just, there's no reason why, guys, oil couldn't be down in the 30s. So we had a good call on this swing line. Again, it's one thing to have an idea about where something might trade. The timing was brilliant. People wanted to draw a trend line off the low, but they're ignoring the fact that the immediate trend has been down. This was a bounce to a lower high. I highlighted very specifically on our group and with our team, you need to be shorting this bounce to a lower high, topping tail, swing line, sell setup, short, cover into the lows, and then or just trail out or reshort. And I covered yesterday most of my oil short, all of it actually. I maybe have a couple puts. But here's how I think you play it from here. Again, this isn't going to go away, right? The effects on all this. So any bounce for whatever reason, we need to be a seller in oil. That's just the trend anyway. All right, this daily cycle worked really good. It's the reverse now. Any bounce to the underside of here needs to be shorted. And then I think if you want to set up now, when I was looking at the implied volatility, it's still relatively low. See the big spikes we've had up here to like 1, and then here on this massive sell-off we had in 2018. If things are going to get worse from here, and you guys can buy puts down here at 35. or go for the 30 strike as a way to stay core short longer term without having to be really aggressive like on the daily chart since we're oversold. So I think I may do that, roll out till the back half of this year, or like June, July, August, and buy some put ratio spreads down here at 35, and then see if the market comes and gets me. And then that way I'm course short if we don't get a bounce. But if we do get a bounce, then I'll sell the futures. All right, guys, great week. I mean, it's not fun to think through this stuff with families and having to even prepare, or school shutdowns, or what. It's crazy. It's even crazier that, we do all this work to set ourselves up to have beneficial new trade relationships with China. And then these crazy mad global scientists, whether it was US, I mean, we're funding these assholes in the US just like all the other psychopaths are funding stuff all over in other countries. But for China to get this to leak out and then just affect the entire world like this is it's madness. It's insane. And I'm surprised more people aren't pissed off. I guess people in the US will be once it starts to affect them immediately. We trade the vol. There's a couple different ways I'm trading the vol also, but I'll let you guys join the room, Cycle Edge team, if you want to do that. So the way we're set up, I have a free chat room. You can pop in here. I will send invites over the weekend if you opt in. Go to jenkinscm.com. jenkinscm.com. Free chat room right here. That'll I can reach out to you and invite you. I have to invite you into the platform. It's pretty secure. I'm posting this video and then the videos I've been doing subsequent here under free analysis. I'm also working on some new Cycle Edge work we have. I mean, guys, I highlight the trades because a lot of you have had some of the biggest days and weeks and months you've had. Well, people are absolutely getting crushed. This is why I started the firm in 08, or when I traded through 08, 09, and then I left, and I still on the bond desk for many years. But then when I wanted to leave that and come help individual independent traders, because of how much of a shit show it is when there's a cycle turns down and when there is a lot of risk and there is bear markets. And this is a great example of how Wall Street levered everybody up into the highs last month because everything looked good on the horizon, according to them. And then they absolutely get crushed. So we've been on the other side of everybody that's panicking and puking, and we've had record weeks. But we have, I believe, the best cyclical intermediate term, near term edges, cycle work and analysis that helps with timing. And we have a very good trend following perspective and risk management approach where we're adding and reducing. And I teach that all in the model. That's under our courses. But guys, the memberships, Cycle Edge is $50. It used to be $150 a month. It doesn't get any cheaper than that to help you get set up on the right side of these global markets. I mean, we've been on the right side of this trade and these risk off moves, every single one of them. You know, our bond trade's been going on since third quarter of 2018. So get in there, you'll get all the real-time alerts. This is our Options Edge group. That product is great. It's only $2,000. You get all my options training. I teach you the entire model, our entire directional institutional model you get for that. But then you're as part of my team and group, and we're taking trades together. I mean, the Options Edge team, we were along the VIX here back in January. These calls all exploded, 12, 13 strike, 15, 16, 18. The VIX today, this afternoon, we're settling up at 47. Crushed that trade. That trade alone pays for the service. And I know if some of you, it's maybe a stretch, but you can't have a broke mentality. If you think you're not going to be able to pull $2,000 out of the market the entire year trading options, you absolutely will, because you're part of a team. We have a model, a process. I know which options look best, what to buy. But any one of these trades is going to pay for the service. So you guys just need to do it, whether you want to protect. I mean, I was long Apple calls. I have been for years. bought puts right on the screws, almost on the highs before we started rolling over. I mean, what is that worth? Just learning to hedge your portfolio. What we did on oil. This is us buying the junior gold miners on the lows in January. This is short the Russell. I mean, these are $2,000 days. These are $4,000 days on short semis. This trade's been a monster. I was up like 34 grand on that trade alone today. Well, there I posted year to date. I still have a little bit on. So many plays, volatility trades, and equities, bonds. If you're not into futures, this is just the options is the best way to take positions in these markets because you don't have to tie up all your capital. And this is our cycle edge room. This is any signal that we're firing off, whether it's Forex, Euro, the VIX, a lot of conversation. So those are all the real-time alerts, plus videos, analysis. And then our prop team, guys, this is a fun group. We trade together every day. So instead of getting coaching from me, which I used to pay for, you get 8 weeks. It's every single day we're working on stuff together. If you're having a problem with something, I teach you how to journal your trades. We work on it. We work on it real time. That's the best way you're going to get good. It's one thing to take a seminar or my course, and then I work with you over the phone after hours in the evening, whatever. And then you're on your own the next day. But when you're working together in real time, it's like, okay, this is what it looks like as when there's a flip near term. This is how we flip and go the other way. This is how we stop and reverse. That's all on the prop team. And then in addition to the prop team, I partnered with the New York firm Top Step, and we're helping get you guys consistent, know your edges, put up big numbers, but then get you capital. So put your money, guys, not into the market to learn. You're going to go into the markets without the right training. It's going to be a growth curve. Your learning curve. You're going to struggle. And when you're wrong and you're learning in this game, you lose money. So don't go blow half your account. Spend the money with a coach. Spend the money getting the training and the course material you need. You get all my coursework, everything I've ever done, from Forex to options to to the full institutional directional model. But then I can work with you every single day. You're part of a group team. You know, this is my elite group that's serious about day trading. And then we're obviously talking longer term positions and everything. But guys, just invest in yourself and in a coach and then in a program that'll get you capital. I mean, most of you don't have 150 grand to go out and start trading futures with, but you can get that type of capital through this program. And then, so we know the metrics to work toward and help you have a process to get there. So anyway, that's all I really want to say. Hope everybody has a great weekend. I'm working on some analysis and just kind of be creative this week. So maybe check the socials. If you guys want to sign up for this stuff, again, it's jenkinscm.com. And the memberships will get you where you want to be. Here's some courses if you don't have the time or you just want to one-off that. And come into the chat room, and that's the best way to ask me questions. Of course, we have the ebook. Yeah, and specifically on the prop, guys, if you have more questions, click the weekly analysis button, or sorry, I don't know why that's different. Free analysis, and then come down to right here. It'll pop up. Just put your name and email in, and I can follow up with you. All right. Hope you guys had a great week. We sure did. If you didn't, maybe there's a reason for that, and let's get you on the right path going into next week. This is just going to be a crazy year for markets. Lots of vol, lots of opportunity. We were day trading, trying to make 5-10 points on the NASDAQ. Now we're getting 300-point moves, and you're getting 50-point moves on the 1 minute. It's just fantastic trading. I did $8 grand yesterday. Before that, a good day, we're scratching out $800 because just market volatility is low. It's 10 times the amount of opportunity. So don't wait, guys. If you waited in February, you missed all this. I keep telling you, don't wait. The cycle's turning. Don't wait. There's volatility is going to pick up. Now it's here. Don't miss the March moves. All right. Guys, be safe. Have a great weekend. We'll talk to you.